Just a beautiful trade today. Absolutely perfect. Great volume today. A lot of perfect rotations. Just a lot of opportunity today. And no, none of that is true. Today was really slow and just miserable to watch, and just kind of churned through everybody's levels. We crossed the IB to the downside, and then we crossed it to the high side for a neutral day, and then crossed back to the downside and got an extension for further lows and a pullback and a close to headed towards lows again. It was an ugly day, and all just really slow, really low volume. We even had I don't know if you guys use a 2-tick Renko chart or not, but we had one 2-tick Renko bar in a half-hour period at one point. I think it was between like 12:30 and 1 or 1 and 1:30 or something like that. But anyway, I hope none of you were staring at the screen as that 3 ticks of range was bouncing back and forth for a half hour. But I digress. We did have a good opportunity here, and it was to the short side, and I missed it. I was biased towards the long side, and I did not know that until after I was already in it and involved and lost money on it. So here's a lesson in not trying to impart your own biases on the market. But I was, unfortunately, and I paid for it. I paid the price. So let's just play it out. I'll show you what happened. So we get the open. We put in the overnight volume point of control above the prior RTH session, the regular trading hours session volume point of control. So that tells me that we're accepting higher in the Globex session. And that is, we didn't really have a consensus overnight as far as risk. Gold was up, which might have been an indication that we were interested in a bearish day. But treasuries were flat, currencies were mixed. European markets were mixed, and U.S. equity futures were just flat to slightly higher, basically, if I remember correctly. But recently we've seen, as FT's mentioned a lot of times in the Trader Bites and in AMAs and videos and such, that it's like a balloon underwater. You try to hold it down, but then it just pops right back up. So all these things, for some reason, imparted in my mind that I was going to be looking for longs today, and it helped that we opened above the prior volume point of control and the micro composite volume point of control for the area for the past 2 weeks, I think. And we tested lower first. All of that is another indication for me that we haven't tested it to the high side. We're probably just moving down here to find buyers. And so we did. We tested down first. We tested down to 77.75, I think, is the volume point of control for this area. I might be wrong for the micro composite. But there's so many things here that are just saying that there's a lot of pressure from the sellers. I mean, look at the size of this volume that goes off. What's that? 1064 here at the lowest price. And is that 1064, 1084? Anyway, a lot of volume going off on the bid here. That's pretty aggressive. And this was this like 3 or 4 times, 5 times that this hit 77.50. That confirms the opening swing low here for me. So we have extended range to the downside. Our current opening swing high is 80.75, I believe. Yeah. But that's kind of a developing opening swing high since we haven't seen anything up there yet. If we get a push up there and then another push down, then that next area is likely the volume point of control where sellers really stepped in, because we didn't really see a test higher yet here. We've just pushed straight down. So that's what we got. And let me speed this up. So here you see, I mean, this is just all further telling me, kind of confirming in my mind that's already decided for long. So I'm almost looking for reasons to be right? Which is a horrible thing to do. And I see a little bit of aggression on the bid here, moving back up. I'm not looking short because of this. I see this guy start to pull a little bit. He stays in a little bit here on the offer, and they, you know, buyers take some of that, even though some of it moved out of the way. These guys move out of the way. So I'm like, look, my longs are right here. All right, even though we've got a lot of accumulation here on the bid, we get a flush down, and they start to push. Ah, I want in. Give me in. All right, and so as soon as I see this pullback to what I think is a pullback from this move down to the mid of the area, which is actually 79.25 is the mid of the session here currently, because we've got 80.75 down to 77.25. So we're looking for this test, and I know I can use this. Let's draw a little. Let's use these. Basically, this whole thing here. I mean, this is the developing volume point of control, right? So I'm wrong below that. So I can put my stops in here, and I'm not even going to bother putting in a target, because I can go ahead and tell you that I got 1 tick per contract of favorable excursion. There it is. There's my sweet 1 tick right there before it went against me and just came right back down. And now, I mean, at this point, as this is happening, I'm going to get this out of the way now. But as this happens, right, we get this lower low, and we push up, and we get this high right here, right? We've pushed higher than this zipper, this consolidation area. In my notes, I write, if we can get an extension above the developing opening swing high, this 80.75, that's when I'm looking for longs. All right, I need a higher high. I need buyers to show me that they can push higher than this level that's barely been tested, right? To show me that if they're going to be in control for the session, then that shouldn't be a big deal. And then a pullback to an area like this zipper, or you know, a mid, and some sort of action on the order flow that, you know, you see liquidity start to move higher, and you see it trade and it stays in the book, something like that. That's when I'm looking to stock long. But I got really aggressive here. I just, like I said before, trying to impart my own bias on the market. And it didn't go to where I said I would react. I said I would react once we got higher highs and a pullback. We didn't get the higher highs. We did get the pullback. And I had a little bit of FOMO here, fear of missing out, that I was going to miss this move because it didn't get as high as I wanted to yet. And it cost me. And that's what you see right here. So I don't know about you guys, but I can't just turn around and trade right after that. I have to kind of, if I get a full stop out, that sucks, man. I didn't get a scale out. Man, nothing. I didn't get anything out of that. That's a full 7 ticks of stop, I think it was, per contract on 2 contracts, and so I gotta walk away, man. I'm not gonna just trade here immediately after. I'm gonna go wash my face and just kind of gather myself and take a couple deep breaths and you know, do whatever you got to do. But I don't know. I mean, maybe some of you seasoned guys can just sit in here and keep objectively trading. But for me, I've got to walk away for about 10-15 minutes. So during that delightful 10 to 15 minutes that I was walking away, you know, not trading, that's when the trade of the day happened. And this is it. We get further extension to the downside to the prior volume point of control, to the tick, I think, was 76.75. So now we've got, hang on. Here we are. Here's the open, push down, a lower high. Buyers weren't able to get back up to push higher. A lower low. Sellers are still in control. There's still contracts going off at these tips, which means that they're still aggressive. This is exhaustion up here, where there's nothing going on at the best offer, right? That's exhaustion on the buyer's part, and just in very micro kind of scale. But that's what we're looking for at these tips. We've got a lot of volume going off below the mid on the, you know, the lower half or whatever, and you know, for the most part, there's nothing in here that's telling me longs anymore. I wish I had followed my own rules and not taken that trade so that I could have taken this one. But let's slow it down and show you what happened. So here we go. The current mid of the session, what do we got? Let me check it out. Would have been, let's see, we got that extension lower. So now we're looking for 79. All right. No, excuse me. 78.75. So now I want to see 78.75 tested. And then once that happens, if I'm going to enter, I need to see something from the order flow. I need to see this liquidity from 80 start to move closer. Something happen. I want to see 79 stay in the book as it's tested and maybe start to reload and maybe see some icebergs or something. But something. I'm not just going to get in blindly just because it happens to be a mid and it looks like the market's going down because we have a lower high and a lower low, right? So as this tests higher, I want to see 78.75 first of all. There you go. So there's my test of 78.75. And as this moves up, we see 2 ticks, almost 3 ticks above that they pull. So this is fake liquidity, just in an instance. I mean, we're going 8 times speed, but that's still, even at 1 time speed, that's pretty fast. There's a lot of volume that goes off here. So there's an area of interest for people, both buyers and sellers, as you can see right next to each other here. And as soon as we see, I'll slow it down a little bit here, maybe. As soon as we see, there you go, there's interest, I want in. And there we go. So I'm in at 78.50 on 2 contracts. Now my stop is going to be, it could be here above this recent high at 79.75, but I give myself 2 points. As you saw back here, that was a full stop. Well, that was 7 ticks, but just because of where this was. But I could have, my extreme would be 8 ticks there. So let's see. If we were going to do that, we'd be at 80.5, and that is above these this recent swing high, this lower high. So that's kind of a perfect spot. So let's put my stops in here. And where's my scale going to be? My scale is going to be 1 tick ahead of this lower high. We traded 40 contracts at 76.5. So I feel comfortable putting my scale out at 76.75. And now let's look at targets. Let's start looking at targets. So my first target actually, I believe, is 76.75. Yeah, it sure is, because that's the prior volume point of control. But I like to front run my target by 3 ticks. So that target's out of the question. It's already been tested. So that's my scale out just because of where it is relative to that prior swing low, not because that's a volume point of control from the last session. My next target, my second target, is the prior value area low, which was 75.25. So I like to front run by 3 ticks. So we'll go with 76. And then my next target down is the prior low a day, which was 73.5. So we're talking about 74.25. So I'll put these in immediately. And then that's it, man. I can walk away, make some lunch, do whatever you got to do. I'm not going to touch this, okay? I want to see it play out. Let's kind of stretch this up so we can watch it. And this happens pretty quick. Of course, this is all in hindsight. I wasn't here to take this in real time. So, take it for what it is, but there we go. We get scale out taken pretty much immediately. And if this goes down and takes 76, great. All right. I'm only looking for a couple of points really per trade, and that's something that I've started to work on recently since we've had that stage 5 private member AMA with Morad, and he talks about Moneyball and how important it is to hit singles instead of hitting home runs, and that's pretty much why Japan is running the show at the World Baseball Classic right now. All right, they got a lot of speedy speedy gents that are popping the ball around the infield and then getting to first base, and that's all you got to do, man. If you can, take base on balls for a living, then you're solid. But that's for another conversation. Anyway, that's the idea. That's what I'm trying to do these days. That was one of my goals for the week. Try to take 2 to 5 point targets. 5 point being on the pretty high side. But if this happens to, this is a really close target to my scale out. But now my theoretical average is up here at 80 half or so. It might be 80 quarter. But if it takes this, it takes it, and that's the end of that trade. And if it doesn't, the next place that I'm looking for is the current developing volume point of control for the day, which is at 78, right here. All right, so currently, because of all of this volume we've put in through here, 78 is the volume point of control for this session right now. So if we move up to there and get more rejection from the sellers, I want to see sellers step back in. I want to see this liquidity from 79 start to move down, etc. Then I'll add on to try to get a runner down to this level. And if I get this target, then I'll try to add on somewhere else. And that's kind of the game. So let's see how we play out here. 78, that's where we're looking right now. Speed it up a little bit. I'm not sure how quick this happens actually. Looks like we're going to get a test here. So you can see there's liquidity down here. Well, looks like we're not going to get it. Oh, we get to move back up. All right, so it tested this this liquidity down here at 76 quarter, and you can see as it came down, they pulled a little bit. Maybe this is going to be fake liquidity, maybe not. They're kind of staying in there. They come down, they're out of here. Right? This is fake liquidity, and this is likely the same actor. You can see where they're kind of entering at the same time and that kind of thing. So likely the same participant. Not that you can really, you can take something away from this being fake liquidity. You know that this is likely to push through on another test down. Excuse me, but we're still looking for this test of 78, and I'm not sure if we're going to get it before the 76 or not. Yeah, here we go. Okay, so there it is. There's a test of 78. You get this push down from 78 quarter. And if this is going in 2 times speed, it's a lot, or in real time, it's a lot easier to see. This happens a lot slower. So I want to add on here. I'm not sure if I'm going to get it or not. I think this might happen pretty quickly. I know a lot of you like to use your market orders, but I like to hang on to my tick. I don't like to pay up. It looks like it's going to cost me. I think it is going to cost me. I think I just missed the boat here. Nope, it's not going to let me in. Yeah. So that's that. You still see sellers moving liquidity down, still becoming aggressive. Hey, we got in. All right, so now, hang on. Now that we're in, we can put our stops right here, right? Both of them. All right, so 79 quarter is, well, it's right in the middle of this zipper, but it's also above this recent swing high. And look, there's nobody, not a single contract went off up here at 79 as we moved up higher. And that's telling of buyers exhausting. So we have some high liquidity starting to get wider and wider at 79. So if it gets through that, we're pretty much done until this next high. Until 80 half. So that's the next level really, where our stop was before. But there's no reason to give up that 6 ticks or 5 ticks. Because we're already wrong if it gets higher than here. So there we go. We've got another one in. We can play this a little bit faster. See what happens as it gets down here. I can tell here that I'm in front of all these guys. My order came in before all this other liquidity. So I know I've got a pretty good position. It doesn't look like it here, but there we go. I'm filled. So we've still got one on for a runner. So now, let's see. What's the next level we're looking at? We're at 77. Currently, now we have a new mid. We have a fresh mid at 78.5. This is our mid. So our stop is pretty good. I mean, that's a pretty solid spot for this final contract. We'll see if we can get one on. I want to look at 78 mid, 78.5 mid, and see if we can't add another one on. So speed it up a little bit until we get up there. What time is it? 10:45 there. Oh, looks like that might have been it. Yeah. So I'm looking for areas in here that I can lean against to, you know, if these lasted a little bit longer, or, you know, there's nothing I can do here. I mean, I'm taking, you know, if it comes all the way back to 79.25 and stops me out, it stops me out. But oh, that looks pretty good. I mean, we got a little bounce there, but you see, now on something like this, I mean, if it turns all the way back around and stops me out, I mean, that's a shame, right? But what I'm seeing here is that the liquidity on the bid is still pulling. They're still pulling. They're not. This is more fake liquidity. So I'm expecting this to still be taken. I mean, if this was, say, my target was at 73.75, just, you know, for argument's sake, and we saw this test this bright white wall of liquidity, and it tested it and started to take out orders here and started to trade, and then bounced up and came back down and started to trade it again on this white line, and the white line stayed bright white, then I would move my target up and I would just take whatever I can get. In that case, I'm not going to be a dick for a tick, man. I don't want this to turn. The worst thing in the world for me is to sit here through this horrible, miserably slow day and watch it just churn all the way back and just take back all of that profit on my last contract, okay? And of course, I'd love to have another contract on to hold a runner, but we didn't. I mean, nothing. There's nothing here for me to add on to. So at this point, I mean, we're within one tick of my target. We've traded on both sides, so if, you know, I'm basically holding this with my mouse, and, you know, if it looks like it's not going to take me and start to go, you know, I'll take what I can get. I'm not going to see. I mean, that would have been had this remained in the book back here, and I saw this move start to go up, I'd move my target up 2 ticks or something like that. But that's another thing, is I don't move it up more than the 2 ticks. I just want, you know, I'm not going to be a dick for a tick. I'm going to be a dick for 2 ticks. But that's the idea. So we still get, I mean, we're still getting a lower high here. See what happens. But I mean, none of this is, you know, all this is telling me that we're still very likely to test below. And, you know, of course, the benefit of doing all this in retrospect. But look, this liquidity pops in and just scares these guys down. Look at that. We didn't get a test there. 76, 70. So anyway, this actually ends up taking quite a while to work out. Let's see. That's not too bad. Ends up at like 11:45 or so. So yeah, here we go. We get the test there and then the push through. And of course, you know, like we said earlier, if it's going to come down, it's going to push through, because all this is fake. I mean, these guys are likely the same person. As it comes down, you see them pulling orders, and we get a push through, straight through. I mean, they pop back in here for a second, but and actually that ends up being the low of the day. But none of this really tells me that, you know, buyers are really stepping in yet, because they just backed out of the way of that. So anyway, I don't know, man. I feel like I'm just completely rambling to myself at this point, but I hope you guys get something out of that. I don't know if it's helpful or just makes you even more confused, but feel free to shoot me questions and email me if you want to. I want to see what you guys are doing. You guys post a video. Show me what you got, man. Anyway, I'll see you guys on Monday. Have a good weekend.